This interview is for information only and should not be considered as investment advice or a recommendation to buy shares in the company featured. Welcome to this Stock Box interview. Joining us today is George Roach, the CEO of Premier African Minerals, following news regarding the heads of terms signed with Suzhou to establish a large-scale pilot plant at Zulu Lithium. So hello, George. Welcome back on the Stock Box. It's good to be talking. How are you doing?
Yes, I'm fine. Thank you. And it's good to be talking to you as well.
Well, thank you very much for coming on. So some highlights from the RNS are that Suzhou TA&A have agreed to provide funding amount of $34 million with a prepayment of 3.45, which is expected to fully fund the construction phase. Suzhou will also have the right to acquire the first 3 years of production of SC6 spodumene product, or until such time as the prepayment amount has been repaid in full. And Premier will become cash generative for the first time when the first shipment is going. So very significant, George. Let me first of all get your thoughts on this news.
Well, I'm obviously delighted, and I think that the most significant thing about it is that what we are seeing with our ongoing exploration at Zulu has given both us and our investors the confidence to go ahead and fund a pilot plant operation in short order. And I can only say that putting in a pilot plant at this stage is hugely risk mitigated as well by current demand for spodumene, price structures. And it will allow us, as a pilot plant, to complete the rest of the test work that we need, to bring in a whole lot of other revenue streams with it, et cetera, et cetera. It's an incredibly exciting opportunity for Prem at the moment.
Excellent. So what was the basis on which the decision was made to build this mine?
Well, as I said just now, the current demand for spodumene and the pricing massively mitigates risk associated with this. The issue is that we've looked at a flow sheet that's a little different to that a lot of other people have traditionally followed. And our flow sheet will be based on sensor-based sorting of the run-of-mine material. Now, the pegmatites at Zulu are pretty common in terms of how they occur with a lot of other pegmatites. And as you take these things out, you get zoned, you get gang material between a number of these steeply dipping pegmatite bodies that we have, et cetera, et cetera. And passing the run-of-mine ore through sensor-based sorters means that as you progress through the process, you become much more efficient. You're able to deal with a more concentrated quantity of spodumene in a reduced overall mass. Your efficiencies are better in terms of the plant. Your recoveries are likely to be better, and so on. So looking at this, the initial stages of the pilot plant will only be concerned with spodumene. That's all. Now, we've obviously got other byproduct. We've got tantalum that's sitting in a magnetic fraction that'll be pulled out. We'll also be stockpiling a mixed ore that has got a lot of petalite in it. And that mixed ore, for example, with petalite will sit there for another 2 years before we come back and reprocess once we've completed further test work and put in additional circuits to deal with it. The magnetic fraction with tantalum, we haven't even costed into our revenue streams at this stage, but it's going to be a significantly valuable item. And all we've focused on is getting spodumene out from the flotation plant that we have there as much as we can and as quickly as we can, whilst refining the rest of the processes along the way.
Okay. I did read about the sensor-based sorting. You say it's state-of-the-art. Is this really to help you focus purely on the spodumene?
Well, it's to help us in the first stage of the sensor-based sorting. Gang material, country rock that gets associated with it as you mine and so on, will be thrown out. So that comes out of the run-of-mine ore that's being fed through to the rest of the plant. In the next sensor-based sorting stages that we get to, we'll pull out the petalite-rich ore, and that will go into a stockpile. The next stage of the process will see milling and then an extraction of the tantalite magnetic fraction that'll come out, and that gets bagged and is probably a saleable product. The next element of this flotation circuit will pull out lepidolite and mica-associated products, and that's got a fair amount of lithium in as well, but it's also got whatever cesium and in particular any rubidium that may be in that product. And it looks like there's a fair amount of that too. That will also go into a product that is potentially saleable. And then the final step is spodumene. And the spodumene, we believe, is going to be a good high grade of spodumene. And that's what's going to be the saleable commodity. We anticipate round about, we've said, I think we've said 50,000 ton per annum, 48,000 tons per annum. We anticipate round about 5,000 ton a month, actually. So
Okay.
We've been a little conservative with the number. But once again, the fine-tuning of this, the fine-tuning of the sorters as we go through, all of this will have a significant impact on the recoveries, the success of the recoveries, and so on.
Okay.
So we anticipate that the pilot plant will operate for between 2 and 3 years. And in that period of time, our ongoing exploration and resource development activities, completion of test work, et cetera, will then allow us to design and implement a much bigger and much longer term mining operation at Zulu.
Okay. Excellent.
Let me just make this comment that what we'll be putting into the pilot plant is not going to take the pits much deeper than about 30, 35 meters, maybe. It's taking a small component of what we believe will be the eventual resource, and it's only confined within our exploration licenses. We haven't even got out into the larger EPO area.
Mm-hmm.
All of this is coming out from within the exploration licenses, the claim certificates themselves, the original claims.
Okay, good. Well, it's certainly a milestone moment for the company. I wonder if I can just talk to you about the deadline, that deadline of March the 23rd for production and cash flow. How realistic is this? And could you perhaps share on the plan or the strategy in place to meet this deadline?
Sure, and that'll be a pleasure to do so. The plant construction timelines to final completion and delivery to site give us to mid-January. Now, most of the plant will be on site by the end of December. The final components will only come in January. At site, the civils work commences on the 30th of July. The contractors are all at site. We anticipate that civils will be completed prior to commencement of delivery of the plant. The civils footprint it's a pilot plant. It's not that big, although it's not small either. And other ancillary requirements at site include power. Initially, we'll be using generators, but we are looking at solar options, and the solar options are looking quite exciting at the moment. Water availability at site will come from a dam, and that dam construction is being surveyed right now. The surveyors are at site, access to it has been opened, and it's anticipated that as a masonry arch dam to the height that we need initially, this will be completed probably by sometime in December, early January. So getting the equipment and so on to site, we do not anticipate a problem. We do not anticipate a problem in terms of overall construction of this. In fact, 2 of the 4 TOMRA sorters that will be used are already sitting at the fabricators in their containers that they will be in as they are transported to site. So elements of this thing are they're already there and done. We've had extensive engineering and planning meetings with our various consultants. I've had another 2-day strategy session over Sunday and Monday, going through these timelines again. And we are confident at this stage that there is not going to be a difficulty in getting this plant commissioned and in production probably sometime in February. So come to a first shipping date at the end of March. At this time, our planning indicates to us that we will meet that. Okay. Logistics-wise, we are comfortable with, they're sorted out. We know what they're going to be. The road upgrades that are necessary will actually finish at the end of July. So we're even ahead of ourselves in some areas. So at the moment, comfortable on that. And we will be updating on a monthly basis. We're going to have very serious meetings to analyze and understand where we are time-wise, apart from the work that the project managers are doing, which is updated. Their work is updated on a daily basis. Okay. So comfortable with that date.
Okay, well, you've laid that out quite clearly there, and you say regular updates. Does this include RNS to market to keep shareholders updated with the progress? Yeah, okay.
Yeah, absolutely. And in fact, I've suggested to our internal IR people they should put up a camera there, and I suggested live feed, but maybe we shouldn't make it live feed. You never know what you're going to find on it.
Yeah, it is maybe risky. If you can get cellular data out there, though, that's impressive to do a live feed. But yeah, a little camera to track progress would be very good, I think. Are you able to explain the risk and security of the loan, as some might see that as a bit of a concern?
Yes, I'm comfortable to go through that. And internally, we did a lot of analysis at board level, and it is a related party transaction. This is we set out in RNS. So we were really compelled to go into this in lots of care and detail. So first of all, the final deadline date in terms of which there could be any access to any security is at the end of May. And then there is a notice period anyway thereafter. So if nothing had been shipped by the end of May, then a notice period could kick in, and then there could potentially be an exercise against security if the decision was that the operation was not going to go ahead, which at this stage we see no reason to expect. But let me go into some of the potential mitigation of this, because I think it's very important. First of all, the demand for spodumene and the pricing of spodumene at the moment in themselves are mitigators. And then allied to that, Prem has an arrangement with our investors at the moment in terms of which they have rights of first refusal and various other rights that they have. But nothing stops anybody else, or nothing, let me say this, let me step back. Nothing stops Premier from repaying this money that's lent at any time. And that's written into the agreements. Now, I have ongoing approaches from any number of other people wanting access to spodumene. So the arrangement with Suzhou is a great one in terms of getting this done. But they're not the only people who want this. And if something were to go wrong and they were not to proceed, I am completely confident at this moment, subject to spodumene demand and pricing staying where it is, that there are a lot of other people who would want to step in and who would want to get involved and take over this kind of position. I'm not suggesting that's where we would go, and I'm not suggesting it's what I want to do. But I am saying that in assessing the risks associated with the security, we had to look at what alternatives there may be. So in summary, we have the right to repay this in full at any time. And nothing stops us, subject to rights of first refusal, to looking elsewhere if something were to go wrong in terms of the relationship with Suzhou. So I hope that alleviates that area of concern at the moment.
Okay. Yes, I'm sure it does. Thank you for explaining that. Now, I noticed on Twitter that it looks like you are increasing your staff complement. Are you able to elaborate on the various people involved in building this mine?
Wow. Okay. So at the Zulu site at the moment, there are probably in excess of 100 people working. And they are broken down into new camp construction, because the original camp the exploration camp that we built, has done what most exploration camps do, and that is just show you where else you've got some more mineralization. So the existing exploration camp is going to end up in one of the pits as we go forward. So new camp is well under construction. This is now almost, I think by the end of this week, it's at roof height. So that's on that. The actual site preparation work in terms of earthworks and civils, we've, apart from the team that is doing the road upgrades, and it's 70 kilometers of road upgrade, that team will move onto site on the 30th of July. And they will commence with the earthworks and civils for the plant, for the tailings facilities, for the stockpile, for the petalite rich ore, and so on. At site at the moment, access has been opened up to where the dam sites will be. And the surveyors are on site right now doing the survey work for the positioning of those final walls and so on for the dam and for whatever else we're going to have on site. So at site, 100 more, there's probably more than 100 people working there. In terms of our own internal team, we are looking at the moment to engage the staff who are going to run the mine. We're interviewing for mine general manager, for mining manager, processing manager, and various other key positions. So they should all come on board before the end of this year. And in fact, if we can appoint a general manager in the next couple of months, I'll be very, very happy indeed. So that's the big area of increase. We're working very closely with consultants who are concerned with civils design, who are concerned with tailings design and so on. As we go a little bit further down the line, they will be moving teams to site to start constructing the drainage and water recovery systems, the penstock systems and so on for tailings, et cetera, et cetera. So whilst we're still a fairly tight head office team, we're using a lot of other outside skills all over the place to pull this thing together, as is no different with most mining operations that are going to be built.
Okay. Just with regards to the discount price of spodumene mentioned in the RNS, are you able to clarify this at all?
Yes. Look, let me make the point that pricing detail, everybody trading in this is quite sensitive about publishing detailed pricing. On the basis that Suzhou have provided this funding with no interest and so on and so forth, we agreed that we would offer a discount for so long as there is an outstanding amount in terms of the funding. Now that discount is limited. It applies only to the mine gate price of the product. It doesn't discount freight and other shipping costs. That's all it applies to, and it is subject to approval from the Minerals Marketing Council people in Zimbabwe. On the basis that there is a debt at the time and it's interest-free and so on, we do not expect a particular difficulty with that. I think that's could be considered to be in the normal course of business. The overall pricing structure will be based off the preceding month's average contract prices as are being reported by I think the one we've selected is probably Fast Markets, but it could be Shanghai Metal Exchange or whoever it is. There are a number of them that report, and they're all pretty well much of a muchness. So the price will depend on whatever that previous month's average contract pricing was. That's how it will be. To give you an idea, in May, I think that price was a little over $4,000 a ton. Was the contract 4,100, something like that, whatever the number was. I think that was the average number. And then for the first year, and whilst there is any outstanding amount on the funding package, there is a floor price that has been agreed. And that floor price is well above the OPEX and all prems costs and so on will all be comfortably covered under that floor price. Okay. So I think that's kind of where the pricing is. It's pretty well in line with what's happening elsewhere, although, as I've just said to you, there's sensitivity from a lot of people about publishing too much detail in terms of the actual pricing.
Okay, that explains that. So just a final point, just on the ongoing drilling and the assay results. Investors are always quite keen to hear about what's going on with the assay results and the continued drilling. Are you able to discuss any assay results today with me? And also, does the build of the mine indicate you will stop drilling, or will that continue all the way through? I think you mentioned earlier you're not stopping on that.
Yeah, let me deal with the last part of that question first. No, the drilling will be ongoing. The intense close space drilling in terms of where we're going to mine from, that's going to slow down in the next month or so as we complete what we need to complete for the initial pits. But the extension drilling, extending the resource, going north and going south in both, it's open in both directions. That will go on. I don't think that's going to stop for, I don't know, we might be drilling there in the next 3 or 4 years still. The whole area is that big, and the anticipation of the overall size of this thing, I think, indicates it'll be ongoing for a long time. So in terms of the actual resource numbers and assay results and so on, I've said on a number of occasions that we pulled back and did a complete reassessment and reevaluation and revision of everything that we had done from the time we started in the early part of last year. In terms of actual assay results reported, most of the assays have actually been rerun and rechecked. And the reason for this is twofold. We changed our principal independent party who's going to have to do the sign off on this. And there were also some anomalies in terms of standard reference material, blanks, and so on. So to make sure that we understand the percentage deviations that could relate to assay results, most of them have been rerun. Those are all, I think they're all in now. And I think there's a lot of compilation work being done in anticipation of starting to release very soon a string of assay results. But at the same time, there were issues that needed to be attended to related to the ore body itself and the actual description of this. Now, whilst the geology had been mapped out and understood, there were a couple of things that needed to be corrected. For example, our boreholes, whilst the location of each was known based on GPS references at site, the detailed survey work that accurately places every single borehole to within a couple of centimeters effectively had not been done. And that is all in process at the moment. The effect of this is that mining it at 30 meters deep is not going to make much of a difference. You're not going to see too much of a deviation. But by the time you get to a couple of 100 meters deep and you look at the section and the mineralization in a borehole off an exact location and reference that to the predicted geological model, there are some deviations. So all of that's being pulled into place. So there's a much better and much more accurate understanding of this ore body. In addition to that, pretty typical of pegmatites, this is a series of pegmatite ore bodies that are steeply dipping across a relatively narrow area. Narrow, in some places it might be up to 400 meters wide, in others probably 50 to 80. So it's quite a zone that's got these things in. And in drilling through these multiple different vertical sections of pegmatite, it's zoned. So some of them are particularly high in spodumene. And we're very fortunate. We've got some very nice intersections and really good spodumene situations. But you'll also find that another pegmatite may be low in spodumene, but very high in tantalum. And with the ore sorters that we have, and with an understanding of how this ore body is being made up, we will be able to take out this whole thing as a package, and using the ore sorters, eliminate as much as we can before we get into the process plant, and in this way get a better recovery of the overall variety of different product that is eventually going to come out of the Zulu mines. Okay. So I hope that's helped to an extent. I know it's more detail than I would normally talk about, but I think under the circumstances, it's probably necessary to do it.
Okay, yeah. So you've been reevaluating how you're going about it, and the results will be released to market as and when.
Yeah, look, I think the first of them are going to be pretty soon now.
Okay.
And as I say, the where a geological model has needed to be pulled straight or adjusted slightly, that's all being done as well. Okay. So there's a huge amount of very good and solid code compliant work that is being done right now on this thing. All very much to the good as we go into this phase, this next mining phase.
Yes, indeed. The next mining phase. It's nice to see some good positive news from a company in this space, particularly in the lull of the typical summer on the stock exchange, but also, of course, the kind of disorder that's going on as well with market pullbacks. I think in a different market, your share price would have reacted quite considerably differently. But it's great to see that the company is making significant progress and setting up, hopefully, very well for when the sector does come back into favour, which hopefully is not too long away. So great to get an update on that progress. George Roach, the CEO of Premier African Minerals, thank you for joining me today.
Thank you indeed, Mark. Thank you.
If you enjoyed this interview, then give us a thumbs up, a like or a retweet. Subscribe to us on YouTube or follow us on Twitter and hit that notification bell to be the first to know when we release new content. There's loads of great content on our website too, across all our programs at stockboxmedia.com. Thank you for watching.